So, for the last class, we did the introduction aspect, right? The basic stage
Yeah,
where we talked about structure and all that, right?
yeah,
So now, what we'll be discussing right here will be the manipulation stage
yeah,
and then the intermediate stage. Okay,
yeah,
we'll be talking about these two today. Let me look at the time frame for these two. It's supposed to be 1 hour and few minutes. Okay,
yeah.
so okay, 1 hour. Okay. So now, have you ever wondered how probably when you are in the market and then you want to trade, you want to enter a sell and then you enter the sell, place your stop loss, and then price will just stick out your stop loss and then go in your way. Has that ever happened to you? Exactly. Now that is just the manipulation. Okay, that's manipulation. Now, when we get to this advanced stage, we are going to talk about how the manipulation works. That's how algo structure works. So for now, this is just like the basic manipulation, the retail concept, how price do manipulate retail traders, the support and resistance and all that, right? So now let's look at some saved markups. Let's look at some saved markups. So we use relation. Now let's look at basic markup for manipulation. Now this is structure, okay? The structure, we had this push down, this push up, this push down, and price broke structure right here. Now, when price breaks structure right here, smart money traders, they do trade RTO, that's return to order block, okay? Whereby when they see a break of structure, they're going to mark the order block just below the break of structure, and so that's their PY, and they're going to set their buy limit
Yeah.
and then stop loss below. So they want to see price do this, come down to tag them in and then goes back up. Okay. This is what smart money wants to see. Now, what what price normally do, like 70 to 80% of the time after the break of structure now. Smart money traders, they are going to mark their POI right here and they want to buy from here. Now, what will price do now? Price is going to come down, tap them, right?
Yeah.
It's going to trigger their entry, right? It's going to like activate them and then give them a little hope that it's going back up. And then price is going to take them out of the trade, right? The price is going to take them out of the trade. Now, after taking this stop loss, what are they going to do? They're going to say, okay, now since the buy failed and then price broke structure from the downside, they call it change of character. I know you've heard of this, right? They call it change of character approach now. Yeah. Now, when they see that, they'll now say, now this is a change of character to the downside. Okay. I want to set my limits on the supply zone or return to order block right here. Since the trend is changing to bearish trend, so they want to see this after the break, a mitigation, and then continuation. This is what they want to see. But then what price is going to do, or what price might do, price will then do this. Break the structure, right? Take out these guys, and then comes back up. It's going to activate their sell limits, okay, or their sell orders, and then give them a little hope, and then it's going to take them out. So you see, price manipulated these guys right here, and also manipulated these guys right here. Now, this markup right here, how will algo traders now? How will they take this trade? Now, algo traders, remember, we try to trade in the way that the institution trade, that the big banks trade, because the big banks, they know where the normal retail traders stop loss are. Okay, so they trade to target all of their stop losses. Okay,
Yes.
so now what we're going to have, right? What we're going to have, the algo trader, after seeing these guys get stopped out, right? This becomes a liquidity level. So now they are going to look for their entry right here.
Yes.
They're going to take their buy, and then they know that these guys, that there'll be bunch of sell orders right here. There'll be bunch of sell orders right here. So they are going to target these guys, target this high, okay? So price is going to take them out. So now the smart money traders are out. The smart money traders are out, but the algo traders, they are going to take good profit from this trade.
Yes.
Do you understand how this works?
Yes.
All right. So now let's look at what we have next. Hold up. Let me look at other samples. Trying to look for a well-detailed chart. Well, okay. Let's look at this now. Let's look at this. Now, there are some traders too that trade only chart pattern. They call them
Yeah.
chart pattern traders, okay?
Yes.
Yeah, the flag, the head and shoulder and all that.
Yeah.
Now, support and resistance traders. I failed to mention them right here because support and resistance traders, they want to trade. There's this concept called support turn resistance turn support. Okay, so this is our support. If you don't see a support turn resistance, so when price breaks this low, you want to see price tap into this support zone and going to turn resistance, and they want to sell from here.
Yeah.
So you see price going to take them out too. Now, why we need to know support? I'll put it. Huh? I think it's my internet. But can you hear me now? Okay, sorry about that. So now, I said why we need to know all of this, right? Why we need to know where these retail traders are going to get in or are going to be stopped out is because as algo traders, we want to get in to trade after manipulation, and we are going to get out of the trade after manipulation because now this becomes a liquidity price manipulated smart money traders, that's where we want to get in the trade, okay? And then when price take them out, that's where we want to get out of the trade. So we need to know all of these, okay?
Yeah.
So now, let's look at this right here. So for this, right?
Yeah.
So for this is what we had. We had price do all of this move to the upside, right? And then what the price do? Price tighten this, right? Now, for normal traders, we see this as trend line, right? Trend line liquidity.
Yeah.
But chart pattern traders, they'll see this as a bearish, as a bullish flag, rather. As a flag, I don't know what they call it, but they see it as a flag. Whereby, when they see a flag or a wedge or whatever, they want to trade the break and retest. Okay, when we have a channel, let's call it a channel. When we have this, they're going to draw a trend line, and when it breaks to the downside, they want to trade the retest of the trend line and the Okay, that's cool. That's cool. That's cool. Yeah, but now what I'm saying is you need to know how they get manipulated, okay? Because to be honest, everything works, okay? All concepts
Yeah.
work. Even the support and resistance, the chart patterns, they do work. But nowadays, you need to know, you need to know all of this so you'll be able to know how to counter them. Because these days, this concept doesn't work. Because when you see this
Yeah.
trend line right here, okay?
Yeah.
This is a break, so this will be the retest they want to buy from here. Okay,
Okay.
they want to buy from here. Give them a little reaction and then broke out of it. Okay, then this becomes a change of character. It becomes a supply zone. So they want to sell from the supply zone. The price comes back in, tapping the supply zone, right? Give them a little hope and then take them out. Same thing with this. If you look at the overall structure, we're going to see the bullish trend, and then we have this shoulder, this head, and this shoulder. So these chart pattern traders, they want to trade the break and retest too, and then price and take them out. Now, how will algo traders come into this trade? Now, looking at external structure, right? You see,
Yeah.
let's say we have this low, we have this high. So price did this, came back down to this point, right?
Yeah.
Came up, came back down to this point, came back up. So you see, this is external structure, external structure, external structure, right? Then we have this, and then we have this. So this becomes our liquidity. So we take
Yeah.
trades after liquidity has been taken. So you see, after liquidity has been taken, algo traders who want to buy from here to target this high. You understand this?
Yeah.
Okay, cool. So let's look at these basic examples. Let's look at these basic examples. We had this right here, external structure, external structure. Price did this, came down, came up, came down. This is a normal break of structure. They'll want to sell from here because we have this break right here. But then just let's look at the next chart, okay? See what price did? Price came into the POI, gave a little reaction, started going down, and then takes them out, okay? So when price takes them out, we have this high right here as our break, this clean POI right here. So let's see what the price do. We have this right here. Right. Later. So we have this. Okay. This becomes resistance, turn support. So these guys they want to buy from here. Okay. They might have taken their trade from here. And then there's also a POI right here for the change of characters trader. Now let's see what the price do. Now you see what price did. Price took out the support, the resistance turn support trader. For these guys right here that want to trade the return to order block after the break, price tag them in, give them a little hope right here, give them a little, came down and then takes them out. So this is basically how manipulation works, okay? Like
Okay.
like you need to understand the points at which retail traders will get in the trade, okay? They want to get into the trade. So when they get into that trade, we want to trade against them, right? We want to target them, take all of their stop losses, just like the institution, right? That's what we try to do. Yeah. So now another aspect of manipulation is the highs